Back again. We back again. This video, I'm going to be talking about the date. So this is the x-axis on the chart. The date is important because you'll realize how on specific days of the month or the week, price will move. Volatility will be increased, and that means that you can get good entries. You can, you can trade on them days where volatility is at its height, and you can actually make a lot of money on them days. So I'm going to be showing you guys on the charts how it actually looks. And not only is it that it's on specific days of the week or month, but it's also at specific times. We have 3 sessions in trading: Asia, London, and New York. At specific times during them sessions, you will see price movement. You will see volatility increase. So let's dive into the charts and let's see what I'm talking about. I know we've been using GBP USD for a lot of these examples, so I'm going to switch to a different pair and I'm going to use USD JPY. So let's see with USD JPY. Let me get rid of all of these, and then let's just scroll back. So with USD JPY, following off the last video in terms of price, so the y-axis, you can see the price is different. So we have 159 and then decimal point 000. So USD JPY is different in that sense, as the decimal point is at a different, it's after 3 numbers instead of 1 number, like Euro USD or GBP USD. Now let's just go to a random point in time. So what I'm going to do is 4 hour, and I'm going to mark points where I see price react from. So basically support and resistance, which we'll cover again in another part. So price pushes down here and we react from this area. Price pushes up, we react from this area. Price pushes down and we react from this area. So if I actually go and take a closer look at when these reactions happened. So at this specific reaction, as you can see, we are in September at the bottom of the chart. So at the beginning of October, so this is the end of a month and then the start of a new month. The 1st of October, the 2nd, and then the 3rd, and then we skyrocket. So at the start of a month, the first 3 days of that new month, we have a big move in price action. And then if I break it down to you guys in terms of the week, we have Monday to Friday. So on specific days in the week, we might also see movement as well. So we react from here. So on this specific day, we react on the Friday. So that's the end of the week, and we reverse. So the end of the week, we see movement. At this specific area here, we also react on a Friday at the end of the week, and then we reverse. So that's just a basic example, and just to show you guys that this is not foo-foo, you know what I'm saying? Like this is not no lie. Like you can go on any chart you want and just go through price and see for yourself. I'm going to choose now. Let me choose a pair that I don't actually trade. So Euro GBP, so Euro Pound. And again, random point in time. Let's start from here. So I see price push up and we react from this area. We push down, push up, we also react from this area. Push down, we push up, and then we react from this area here. So now let's take a closer look and see when these were. So this is August, Wednesday the 7th, Thursday. So on Thursday we see a reaction. So that's the second to last day of the week. On this time, Wednesday, Thursday, so that's Thursday again, we see a reaction. And then this one is Wednesday, so that's the third day of the week, we see a reaction and huge price action move. So not only is it the month, but it is the week. Let's scroll back and see more. So we have this over here, this high, this low, this high. And if you guys are wondering what I'm looking for, all I'm looking for is I want to see changes in price action. So if price is going up, I want to see price then go down. Or if price is going down, I want to see price then go up. So it's just a shift in the trend and the overall direction of price action itself. That's all I'm looking for. And then we'll use this down here. So we're in April, as you guys can see at the bottom. And Monday, Tuesday, Wednesday. So this is Wednesday. We see a huge movement. Thursday, more movement. And then this is Monday. Monday, this pin, this wick is on Tuesday. So that's the second day of the week. We see huge price action, drop it all the way down. We're now back on Monday, Monday, Tuesday, Wednesday. So Monday, Tuesday pretty much consolidated sideways, and then Wednesday, Thursday, Friday we pushed up. So that's the back end of the week. And then Wednesday, consolidation, Friday, Tuesday. So Tuesday, push all the way down. Another thing I want you guys to understand is if you are an intraday trader or if you are a scalper, I'm on the 4-hour time frame. So you need to understand, like, just one candle alone as an intraday trader or a scalper, you can make money. You do not need to catch all of this in order to make money. And essentially wait. Let me get my measuring tool. Day range. And wait 7 days, so that's a whole week. You don't need to trade like that. Don't think that because you see huge movements in price action that you need to catch all of that move. It just depends on the type of trader you are. So when you are seeing these 4-hour bars, like Monday, and then the next 4-hour, boom, we reject. That's at the start of the week. Again, we try push up back to that Monday level, we reject. That's Tuesday. That's a whole 4-hour bar. So if you can catch a move on the 15-minute time frame, on the 5-minute time frame, on the 1-minute time frame, when you're seeing this, you know, we push down, Monday, Tuesday, boom, huge reaction. Just one bar. Up here, Wednesday, still Wednesday, boom, one huge bar. That's a whole 4 hours. And that's the middle of the week. That's me explaining to you guys and showing you the importance of the date, which is the x-axis. Go ahead on any chart of your choice and just see where price reacts from and test it together, price and time. So if you actually integrate the last video and this video together, you will see something. Hope you enjoyed the video and get ready for the next one.